trade processing is a key job, I would say, that comes under investing part. Once we raise funds from investor, fund manager deploy that funds in variety of different financial instruments, and that's what your trade processing come into picture. So as a trade processing team, so they actually record trades and transactions in the books of account. But as an accounting team, it would be your responsibility to verify trades with the broker statement and record that trades in the accounting system as per the debit and credit requirement. So let's discuss that. So I have taken few practical screenshots from the broker sites and all. So I'll walk you through that as well. So let's discuss. So when we say trade processing, so you would see two different activities, major activities. One is trade processing. Trade processing, basically trade processing, it means booking of transaction in the system. And settlement, it means, which is fund pay in and fund pay out status. So along with that, you would see two other aspects as well, like along with the fund pay in payout, you would see security deposit and security transfer withdraw. So this is what your trade processing and trade settlement come into picture. So let's discuss how your that trade settlement and trade security processing works. So I'll just quickly draw the chart so that you can also note it down. So when we say trade processing and settlement, first understand this what happened here. See, investors invest money, then fund manager invest that money in equity, bonds, debentures, T-bills, etc. Equity has T plus 1 and T plus 2 settlement cycle. Bond has again T plus 1 and T plus 2 settlement cycle. Debentures T plus 2. Government bills or treasury bills and all T plus 1 or even T0. Then loans T plus 5 and T plus 10 settlement cycles which we follow. So basically, your fund accountant refer this trade life cycle and booked the transactions or record the transactions in the books of fund. So this is what your fund accounting teams come into picture because they follow this settlement cycle or trade life cycle and record the transactions in the books of account. So maybe sometime you would see multiple teams that comes under your trade processing. Maybe your structure would be like under trade processing. So you would see, let's say, OTC team who take care of swaps, forwards, and even bonds. Maybe you would see equity who take care of preference, common equity, and finally you would see maybe derivative team for futures options. So basically, they'll deal with your margin and other, ways. But one thing that we haven't mentioned, which is uh, maybe money market or fixed income. See, you would see trade processing structure like that, and that particular teams, OTC, equity, derivatives, that they take care of different financial products and ensure that recording of those financial products in the books of fund on a timely manner. And if you are an accounting, if you're a part of, let's say, accounting team, so it's your responsibility to cross verify the trades with the different teams and even reach out to them as and when required. So that's how your trade processing team and job come into picture. So I hope now you got the idea about. So basically your FA team and accounting team works with all trade processing team, different teams, and they resolve the exceptions on a timely manner. All right. So let me take you ahead. So we have lots of things to discuss. So if I talk about trade processing and settlement, so as you know that trading in securities, it's a main business activity of funds. On a daily basis, fund managers, they do the trading on fund portfolio accounts and send the data to the trade entry counting teams. Trade entry teams record all transactions buy and sell for all the different securities on T plus 1 day. If you purchase anything as such, so it means, let's say for example, this particular trade, if you see trade date is 10th of Jan. So on 11th of Jan, this trade, it will record in the books of account with the amount, quantity, trade reference number, and settlement number. So basically, we follow the T plus 1 cycle to record transactions in the books of account. All right. And if you book the trades in incorrectly in the system, it means there will have impact on the NAV. And once the all trades booked, then fund accounting team start to work on final accounting. So your trade processing activity is also important, because once you booked all trades, so where your fund accounting, end-to-end fund accounting team or NAV team, they'll pick up the data or they'll update or recalculate, NAV to verify the impact of trades and everything. All right. Then trade settlement. So once you buy the trades, how your trade settlement that looks like. So see this, once you buy, so there would be two counterparties. When we say counterparty word, counterparty, counterparty, it means buyer and seller, buyer and seller. So here, if we talk about trade or transactions, see the movement in buyer book. What happened? Equity portfolio will be updated by 8:30 a.m. on 11th Jan 2024. So basically, I purchased security on 10th. So it means that will reflected in my portfolio on 11th of January. So I can access the contract note as a buyer on again 11th of January, and demat account, it will be credited. Means shares will be credited in my demat account on 11th of Jan. But my fund, because I'm a buyer, so funds will be debited from your bank account earliest by 10. So my fund will, first fund will cash will out. So basically it will blocked in escrow account. So broker team, they'll block it, of course. All right. And then uh, I'll receive securities in my demat account on 11th of Jan. And that's what fund blocking is very important. Cash will out first and then security will receive later. If I talk about seller, this is for a seller. So same seller portfolio will be updated on 11th of Jan. Then seller can access the contract note on 11th of Jan again, but the demat shares will be debited from seller's account on 10th Jan. So if you see cash and stocks, that movement happened at the same time, and funds will be credited to 11th of on 11th of Jan. So timing and everything which is mentioned. So this demat account and even cash account, cash movement, this will happened at the same time. So this is what your settlement come into picture. Settlement, it means movement of cash and stocks hand in hand to avoid risk. So that's how your trade settlement cycle come into picture. So settlement, it means, as I said, so process securities and process cash in bank account at the same time, to execute that at the same time to avoid or reduce risk. That's what your trade settlement come into picture. But why we are discussing trade settlement, I'll tell you. So on settlement date, we also process accounting entry. So it means on trade date, we create a trade, payables and receivables, and on settlement date, we actually reverse that payable and receivables. So that's what your trade processing and date and trade settlement dates both are very important in fund accounting business. All right. So how trade looks like in a statement? See, we have one example. Let's say Tata Motors quantity, then price, average price, current market price, change, right? Profit and loss. So that you would see, in your Demat account as well, or maybe let's say broker account as well, funds broker account basically. You can check, cross verify, and update it. All right. So make sure that you definitely would expect question around trade date and settlement date, because the same question, like how we follow the trade date and settlement date accounting in the fund book. So that question was asked in BNY interview. So I would request you, so please go through it, prepare it, so that will only help you guys to answer it if you have any coming interviews and all. All right. So let's discuss about goals. Why we do this? Trades are processed accurately as per the trade instructions and in timely manner. Check NAV impact from trading activity. Second, general process that we follow in fund accounting is ensure, means you will have to ensure basically. So make sure if you are a fund accountant, then you need to ensure all trades and local currency settlements are processed before trade cutoff time. Run application trade summary via respective reporting applications. Run applications, insert your fund ID, whatever that you have, then portfolio number, and you can generate the reports. Review trade summary, answer all, means alert, it means message or emails if you have anything as such, so that you can answer. Then provide confirmation to valuation team. Of course, you need to provide confirmation to the valuation team and check receiving valuations notification on pre-NAV. Run macro to download pre-NAV report, so you can check easily, the impact of trade activity on NAV. So that's how you need to follow all the checks, while considering the projection of trade processing activities in NAV process. All right. So we have discussed all of this, details in this process flow, that buy and sell process flow details we have already discussed. Then control procedure is also important. You can, review process change percentage, even, on once the trade is booked, make sure that you have checked it. Every fund or every even fund admin or maybe AMC and all, so they always provide their tolerance limit as well for a fixed income, equities, currencies, options, futures. So what is this? Basically, this is the difference of difference of different security prices. So basically, let's say yesterday stock price was 10 rupees and today the price is 9. So this is basically almost 10% change. So 10% change, if this happened and if you are not able to reconcile it, still okay that you can produce NAV, right? And after that, after production of NAV, you can review that again. But what if, let's say, previous price was 10, current price is which is 8, and this is something beyond the tolerance percentage, so it means you will have to investigate as why there is a difference or a discrepancy in price. That's what your job come into picture, to check if the stock price which is recorded incorrectly or correctly or not, or maybe let's say quantity and everything whatever that you have recorded correctly or not. So you can follow this tolerance limit and update your books or produce your net assets value of the fund. All right. And this depends, as I said, limits vary from fund to funds. It's not fixed. I have seen, with every funds, I have seen different limits while dealing with the funds. So you maybe see the same thing. All right. Then once you book the trades, see how your trade books looks like. Basically, trade book, it means your broker statement, so that provide you insights of everything, your total number of shares, then quantity whatever that you have, average price whatever that you have purchased securities and all, profit and loss account, because we'll have to apply accounting treatment to the profit and loss as well as cost also. So that's what you can check your broker statement, means funds broker statements, to verify trades and even perform reconciliations and all. So then after, of course, you can book the trades. If you see any pending trades to book in system like Geneva, Investron, or accounting systems, you can cross verify it and book that particular trade in the system by referring your statement. All right. So yeah, that's how your broker statement plays crucial role in recording transactions in the books of fund. Then again, that was for equity. Basically, that was means this is for equity. And if you see, this one is for bonds, how bonds looks like. Basically, for a bonds, we book the bonds with that bonds code, then total 10-year investments, maturity, face value, coupon, right? So that we basically check while recording bonds in the system. Then here you would see where you know depends on the trade type, whether the buy and sell. So you can check that on broker statement and record that transactions in the books of account. So basically, we have two types of accounting methods. One is traded basis and another one is settlemented basis. But fund admins or fund institutions, they follow the traded basis. So where they create the trades payable and receivable in the books of fund. But when we talk about custodians and banks, they always follow the settlement date cycle. They don't record any transactions for payables and receivables. They directly record the transactions for paid and received. So here we are going, means we are discussing about fund accounting. So of course, so by default you can apply traded basis accounting methods. And when we record transactions on the basis of trade date, so see how your journal entries looks like. On trade date, purchase security, it means this is basically your trade date. On trade date, you can create accounting entry, cost of investment account debit to purchase payable account credit. And when security payment settled in cash and bank statement or in demat account, so you can prepare accounting entry with purchase payable account debit to cash or bank account credit, because cash will out on settlement date. How your payable looks like, see this. These are the payables. So you can check that on broker statement. Broker statement guide you for everything payable, receivable, right? And then you can record that, you can refer the same trade exposure amount, expenses and everything, and you can update in your books of account. So broker statement provide information for trade securities, quantity, amount, price, means whatever information that you required, you know uh, the broker statement provides the same insight, so that you can refer and create the transactions in the books of account. All right. So let's guess, if fund manager buys shares worth of rupees 10,000 USD or uh, 100, means sorry, 10,000 USD, and record it in the funds book. So this transaction would impact the net assets value of the fund. Do you agree with this? Just go check, do some research on your own, and you can post your answer in comment section. All right. So here we are talking about again sell transactions. In case of sells, see how it looks like. Sell of transaction, it means same. You can check it on broker statement. Broker statement provide you information about sell of transactions and everything. Security sell, it means on trade date what happened. On trade date you can record the transactions, means as a journal entry you can prepare it. Investment receivable account debit to cost of investment account credit. And when actually security settled in bank account, then you can prepare accounting entry like cash and bank account debit to investment receivable account credit. So that investment receivables you can reverse it once you receive cash payment from the counterpart. So you can refer again broker statement to record transactions in the books of account or books of fund basically, and you can cross verify with the statement as well. So let's take a question for a guess. If fund manager FM sold shares worth of rupees 10,000 USD and recorded in the fund's book, so this transactions would this or maybe does this transactions create or impact on it assets value of the fund? Answer it in yes and no, and define even why this will impact or why this will not impact. All right. So again, this is just for accounting knowledge. Try accounting entry for unrealized gain or with unrealized gain. I would say sometime that you would see just because of difference in trade date and settlement date. Right. Let's say on trade date price was 10 and on settlement date price is let's say on trade date price was 100 and on settlement date let's say price is which is 120. So if you apply this logic here, so on sell of transactions, your accounting entry would be cash account debit to cost of investment account credit, and to realize gain on investment account credit. Right? In case of realized one, but what if in case of unrealized one? Unrealized one, your accounting entry would be investment gain account debit to unrealized gain on investment account credit. Sometime you would see instead of gain you would see asset in account as well. So basically it's a assets account only, or investment account debit to unrealized gain on investment account credits. So you would see that transactions or maybe wording a statement in your system. So check it carefully. So don't directly apply my same logic, because every system has different uh, modification or specification, I would say. So maybe that you would see change in the language and all, so you can, but base never change, so you can take the this as a base and you can apply it on the basis of your system requirement. All right. So we have other example as well, couple of examples for different securities and all. So let's see. So here you would see, your mark to market also come into picture. What is mark to market? Basically, mark to market, it means investment price or purchase price or acquisition price. So mark to market, M to M, this marks talks about the purchase price of investment, and market, it means current market value of investment. So simply you should know the M2M of each securities to consider the fair value of investment. And why the M2M is important, you should know the realistic value of your investment. So see that below again this chart. So if you see, I have invested around this, current position value is this, and days profit and loss almost 22,000, 162 was the profit of that particular days. So this profit so becomes your mark. So it means here if I take the same example, so this has become my mark and this one becomes my market. All right, and that's what I will have. Profit means unrealized or realized profit and loss. So basically compare the purchase price of your investments with the market and adjust the difference. If it is positive, then there you can say yeah you have a profit, and if it is negative, then that becomes your loss on investments. All right, that's what your mark to market come into picture. Then you would see some transactions or as well. So here also that you can apply the same logic. Mark to market, it means here if you see I have purchased this particular security which is at 102 and last trade price which is 106. So it means I have a profit in my portfolio of 2000. All right, 2000 profit that I have in my portfolio. So see, this is what your mark to markets come into picture. So this has become mark price and this has become my market price. So if I compare mark with market, so I have a profit of almost 2 rupees per securities, and this is what you would see profit. And same logic we apply in fund accounting as well to record the transactions, because basically we record equities through fair value through profit and loss. Same FETPL applied to the derivative transactions as well, bond transactions as well. All right, so I'll show you that as well, how your options looks like. So this is for equity. So for each equity, basically, we follow that fair value through profit and loss and record it in the books of account. If you see, I have a couple of, equities, Canara Bank, uh, then again Utkarsh, Small Finance Bank. So it means I have a couple of equity trades. If you see, few trades which are in, red, few trades which are in profit. So I have profit and loss, which you can, record it in the books of account. And this is what my total days gain is, 7,1100. So that gain becomes, so basically, so my equity, this equity price value is based on profit and loss. Whatever profit and loss that incurs, so that you can record it in the books of account and update it in the again system, so that it will, in line with your NAV statement. The reason is, if you see, if you record anything incorrectly, so this will directly impact your NAV. It manipulates or influence your NAV, and that's what makes sure you have recorded each and every security, or price of security correctly. If you don't price the security correctly, then ultimately that will lead to the incorrect NAV production. All right. So yeah, we have the other, product like options or futures. If you see, same logic you can apply it in options and futures as well. How future looks like, see, this one is the stock name, Infosys Technology, expiry date which is 25th of Jan 24, then strike price which is 1600, and this one is call option. So basically I have purchased call and put spread. The reason is a fund manager also applies same logic, purchase spread which is call and put. Why? Because I'm not sure whether this particular stock will, offer any profit and loss. So if you see, in call I have a loss, and in put I have a profit. So average, if you see again, which is in loss, but might be that, yeah, tomorrow or maybe day after tomorrow you would see profit in my options, and once I have a profit, then I'll sell it out and get out of this. Ultimate my goal is to make money, right? So same logic fund manager also applied and purchased the securities. But if I talk about value of this option, is value of the option is based on profit and loss. So now you have a loss on this investment, it means this becomes your market. Because if you see, I have purchase price as well. I have purchase which is at 23.20 by paying premium, but the last trade price means market price, which is 18. So if you compare this with 18, in this case, I have a loss, and same logic if you apply it to the other option. So in this case, I have profit. So it means this option current market value is, if you minus this, 2080, which is loss that I have, then it will have actual value. All right. But if I compute the aggregate value of my option portfolio is this one. Why? Because I'll receive other premiums and everything after getting deduction of expenses. But if I take the exit from this contract at the moment, then I'll have to bear 340, which is loss that I have incurred in this particular position. All right. Now, again, this one is for bonds. So as I said, for bonds also we follow the same thing, but depends on the bond's nature, whether it is tradable or non-tradable. Sometimes you would see the bonds, which are tradable, then you can follow the same profit and loss through, that you can compare with the markets and then update that price. But if it is not tradable, then basically we compute or calculate the coupon interest payment and update it in the bonds price, or sometime we update that in the system as well. So basically that becomes your income, and that's what we have discussed that in an income processing session, where we record the income or interest transactions in the books of account and all right. But yeah, so if you bond cycle also, if you see, you can directly purchase, means send a request to the broker will check that particular bonds in market and purchase that bonds, for you. So once the bond is purchased, then that bonds will transfer in a demat account so that you can check it. Means you can track that investment as well. So accrued interest and everything, and then same accrued interest and everything that you can try to match with your systems also. All right. Yeah. Then see bonds tradable, it means you can check that bond prices as well. So if you see, I have this one example where bond is trading at different prices. In the month of September, price was different. Then in November, price was different, and even January or 2024, you would see price which is different. So bond price also, if it is tradable, it means that vary, and you can then apply profit and fair value through profit and loss logic to the bond investment as well in case of tradable bonds, not non-tradable. All right. Then little bit we'll discuss quickly about unrealized M2M gain. We have discussed about what is M2M, but we'll now discuss about accounting entries basically. All right. In case of, let's say you have a loss on investment, then you can record the transaction in a way fair value adjustment account debit to unrealized holding gain account credit. So no, this entry, yeah, this entry is for gain. Right. If you have a gain on investment, then you can apply accounting entry, which is debit always. You can record it your assets account, means valuation account, and credit unrealized holding and gain account. That would be your credited in case of unrealized gain. Then next one is in case of unrealized loss. If you have any unrealized loss, then your accounting entry would be debit unrealized holding loss account debit to fair value adjustment account credit. This is what we prepare accounting entry in case of loss or in case of unrealized loss if you have any received as such. Same logic you can apply it and prepare accounting entries in the books of fund. Then equity securities are accounted for as a portfolio, and only the one journal entry is made each reporting period that recognize the net unrealized gain or loss on the whole portfolio for the period. A separate journal entry is not made for each individual equity. So make sure that you don't need to prepare separate journal entry. Let's say you have thousands of trades, so that doesn't mean you need to prepare thousands of entries. You can compute the portfolio value, and then you can update only one accounting entry or one adjustments. That's how we prepare the journal entries. So we don't prepare journal entries, multiple journal entries for each and every transactions. That doesn't make any sense at all. It's just that will increase your work. All right. Then, in case of realized one, when an equity security is sold, the realized gain or loss on the sell is recorded as follows on the sell date, assuming the security increase in value. So here the condition is you have a gain. If you have a gain, then your accounting entry would be cash account debit to credit gain account and then investment account. Let's say you have received 1000 where gain was 200 and actual cost of investment was 800. So this is how we record transactions in the books of fund. All right. Yeah, so I'm done with this trade processing session. So if you have any questions around it, you can directly post your comment in the description, so I'll get back to you. And on top of that, if you need any personal one-on-one consultation with your doubts and all, I'll provide link to you so you can book one-on-one session with me directly, so that I can help you to understand or to resolve your doubts as well. So you can if you have any